Well, hey there, all you cool cats and kittens. Today is Wednesday, April the 15th, 2020 at 3 o'clock p.m. Eastern Time. I hope everybody is safe and healthy out there right now. I'd like to commend all those brave and faithful folks who are out there serving our community and those who are staying home so that we may protect our great way of life. These sure are unprecedented times, and things are changing minute by minute and hour by hour. With that in mind, today we're joined by Davis Land, expert lender with Prosperity Mortgage, to talk a little bit about what we're seeing in this week's home mortgage changes. Welcome, Davis. Thank you for joining us. How are you and your family today?
Hey, thanks for having me along, bro. Everybody's good. My family's hunkered down. Most all of them are down in Florida at Amelia Island and staying safe on the island. And I'm up here in Atlanta, just trying to stay inside as much as possible, but have to get that breath of fresh air and walk the dog from time to time.
Well, that's great news. I'm glad to hear everybody in your world is doing well right this minute. And to our audience, if you guys have any questions, please leave them with the comments in the video, and we'll be answering those as quickly as possible. So Davis, to start off, tell us a little bit about yourself, who you are, who you work for, and how long you've been in the business.
Sure. So I am, again, Davis Land with Prosperity Mortgage. Been in the business around 20 years. I started with a small broker shop when I first got out of college, and really didn't even know what a mortgage was. I think they gave me a phone book and said, make some calls. So, but I've been doing it about 20 years. I've worked for a bank. I've worked for mortgage companies, and I've worked for direct lenders as well. Actually grew up here in Atlanta, so I'm an Atlanta native. Left for a few years for college and then moved directly back to Atlanta after college.
So you've seen a lot happen over the world. I mean, let's face it, right now is something like we've really never seen before. So tell us, how has the mortgage business changed in the COVID-19 world that we're now living in?
Yeah, so it's very similar to what happened in the housing crisis on the mortgage side of it. I know this isn't considered a housing crisis, but on the mortgage side of it, it's very familiar. When I went through that, what happened was we lost products and programs overnight, and we're continuing to lose those as well. It has definitely slowed down a little bit. There's a lot of lenders that are getting servicers that are getting out of the business. So we're seeing a lot of changes when it comes to that, and really just seeing rates change dramatically day to day, so 5 times a day. And
so it's changing multiple times a day. It's not just like,
Absolutely.
Okay, it's sitting for a day or two and flipping out. So you're having to constantly keep your pulse or your finger on the pulse of what's going on there. So tell us, with all the changes that you're making in your environment related to your work and your service to your clients, I mean, it's obviously it's different from 60, 30 days to even 7 days ago?
Yeah, so the differences are we just got to keep up with the products and the programs changing. We're just trying to, we have meetings every day just to talk about the different things going on in our industry. But you just got to be aware of what's going on. I mean, one of the major changes we're seeing is credit score minimums. We were going as low as 580 credit score 3 weeks ago. That changed to 640 about a week and a half ago, which has now changed to 660. Some lenders, major banks out there, are requiring 20% down with 700 credit scores. We're not there yet. We're still doing low down payments and 660 credit scores and above.
Yeah, I've seen some of those big banks that you're talking about, and they seem to be putting a halt on mortgage programs. So it's great that you still have some great options out there for folks. Given all of this, I mean, are you seeing any positive results coming from all these changes?
You know what? Positive, we're still going to the closing table. We're still closing, we're still originating. There's still contracts being written. I mean, it hasn't come to a complete halt like it did after the housing crisis, which that's a positive. When that happened, luckily being in the mortgage industry, we had refinances at that point in time. But now, we're still getting contracts in. People are still buying. And the good thing about this is it's a short term. This is something that's going to last like the housing crisis. That lasted years. This is short term. This is a pandemic. And once we get past that, we'll see this housing market pop back off.
So that brings me to 2 questions. First of all, What, as a percentage, how many loans would you say that you're originating that you feel would close? I mean, how many are falling out as a percentage, or how many are actually closing?
Yeah.
I've heard 88%.
Yeah, I mean, we're still closing a good percentage. I've had, I think, probably 2 fallouts since this all went down. One was due to a loss of job, and then the other was due to the client had to liquidate some stocks for down payment, and well, we all know what happened to that. So he was going to buy some time and hopefully for the market to rebound and build that portfolio back up. But you know what? I mean, I think as long as they continue to work and continue to have their job, we'll get the deal closed. With that being said, we are doing verification of employments the day before closing. So that's going to be required by all lenders. You know, we can have very easily somebody could get furloughed or cut back on their hours, you know, during the process, which could kill a deal.
Well, let me ask you this question that kind of pops off of that last one. So has there been any indication of when this is all over, how will things return? Will they take into consideration that this was just an odd out of work experience basically, and sort of shuffle those in and still go by your past 2 years income, or how do you think that will shake out?
Yeah, I think underwriters will be aware of the situation. So say a client, you know, gets furloughed for 3 months during this, and then they go back to that same position they had before. The underwriter is going to take that into consideration and not really call it a job gap, because it wasn't a job gap because of the client. It was a job gap because of the situation that we're currently in. So yes, we will be, I mean, it'd be like a continuation of the current job.
Gotcha. Got that. That's very good to know. And I think that's one of the fears that I think a lot of people have is, oh my God, all of a sudden we've had this great work history all these years, and how is this going to look? And I kind of felt the same, but it's great to hear it from an expert like yourself. Davis, are there any recommendations that you would share with our audience today, whether they're refinancing or whether they're looking to purchase their home? Is there something extra they need to be doing to be prepared, or what do you see?
The one recommendation is I will advise anybody and everybody that is currently in a mortgage that is affected by this pandemic to reach out to the servicer of their loan, not the person that originated the loan, because usually it's been sold 2 or 3 times by then, but reach out to the servicer of their loan and let them know their situation and find out the details of what they can and can't do, because each servicer is treating it a little differently. So some of them you have to actually, I've heard, pay back those months immediately after.
Like the 4th month.
Yeah. So you're kind of in the same situation as making your payments. So that's one thing I'd advise. don't stop making payments, because that's going to ding your credit. Work with the servicers are here to work with you. They don't want to put you. So just make sure to reach out and talk to them. Also, you know, just keep in mind that things are getting a little tighter when it comes to underwriting. So debt to income ratios, you can't push as high. I am, on my side, I'm being very conservative when I pre-approve people to not push them too high in case something changes overnight, where, you know, maybe we were approved at a 44% debt to income, and then Fannie Mae dropped it to 43. You know, so I'd like to be a little bit more on the conservative side of it. Other than that, you know, no recommendations. I always say, and this is just something that's even more important now with the credit guidelines tightening up, go ahead and get pre-approved ASAP. I mean, if you're not even buying until August, September, October, go ahead and get pre-approved. You might see that your credit's a little lower than it needs to get approved, but we can work on that. We have a credit counselor group we work directly with. If not, I can give some advice on what you can do to boost credit scores a little bit as well.
So most importantly, if you are in trouble, and we do have these furlough programs, they're different for every single lender. It's not a blanket thing that everybody just all of a sudden gets a 3-year that's added on at the end of their mortgage. Because like you mentioned, and I've heard, they're throwing it on the 4th month. You come back and all of a sudden you got to make 4 months of mortgage payments on that day. And That's going to be a
Right.
stranglehold. And mind your P's and Q's. Watch all your stuff. Make sure that you're being extra thorough. Be prepared ahead of time. We expect things to continue to change. And then when we're out of this, which hopefully will be sooner rather than later, we're going to see these markets sort of rebound back to a normal life again, right? So
yeah. The good thing is we're not in a position where we were in 2008 when we had higher appraised values than probably were out there. We're not in that position. So you've still got equity in your home and you have the ability to sell down the road as opposed to go foreclosure. So hopefully this is very temporary and we can get past this and go back to business as usual.
Well, I've heard the statistic that it's something like 52% of Americans have over 50% of equity in their home. Is that realistic?
I don't know that for sure. I have not seen that, but you know, that wouldn't be surprising. You know, I think a lot of people have throughout the years have paid down their mortgage pretty heavily.
I think a lot of us learned a very valuable lesson in 2008. And it's because, I mean, we saw things, people were flipping houses and throwing vacant units and 100% finance, you know, and nobody had any equity and they just all took off the second the music stopped. So I'm seeing most of my consumers or my homeowners being in a different position today where they can live through this. And we're not seeing like 50 open, you know, vacant units that are speculative investors that are hoping they're going to go up in price because we haven't seen that crazy appreciation. Wow, this is some really valuable information, David. So I appreciate it. Anything else that you'd like to add to tell our folks today?
Let me see. Let's looking back through the notes. You know, always check different products and programs. I try to look at the adjustable rate mortgages now versus the 30-year fixed and, you know, even 15-year fixed. You know, a lot of people. A lot of the refi calls I'm getting right now, people have been in their mortgage 4 or 5 years and they're looking to refinance and you can almost refinance into a 15-year, save them a lot of years and definitely interest over the years.
That's fantastic. Well, Davis, thank you so much for sharing with us today. I think hope it's very helpful to everybody. Our world truly is changing minute by minute and hour by hour. We're all using our homes too, a lot more right now, so things are wearing out quicker. So if you guys are out here tomorrow, join me at 3 p.m. when I'll be talking to Evan Jackson of HSA Home Warranties. Evan will show us some ways to save some money on these unpredictable times. I mean, I know people were talking about their dishwashers are breaking and things are going down like that, so it may be very beneficial. On Friday at 3 p.m., I'll be giving a market update on Inside the Perimeter Homes. Under $1 million and a few of the national statistics as well. And then on Sunday from 2 to 4 p.m., Shaka Walker and I will be hosting a few virtual open houses on condos that are local in the area. I look forward to seeing everybody then. In the meantime, stay safe and stay healthy, my friends.
Thanks, Brew.
Thanks, Davis. Have a great day.
You too.
All right, bye.